Again, good afternoon, my dear students. In the first video, I have covered statement of profit and loss. In this video, we'll specifically focus on the accounting standard. As you all know that you will get the second question for 10 marks on accounting standard. In that you will find 4 sub questions. Out of that you required to solve 2, and I have already explained you will get 2 theoretical and 2 practical questions in these 4 questions. 2 theoretical on 14 as well as 22 and 2 practicals on 16 as well as 20. Understood? Then the 14 we have for amalgamation of the companies. In this standard they have given the scope, then types of amalgamation, and then accounting method for the types of amalgamations. This standard is applicable to new company. Correct. New company, that means in this process you will find old as well as new, amalgamated as well as amalgamating company, or we can say seller or the seller and the purchaser company. This is applicable to purchaser company. Seller company can do the dissolution as well as liquidation as per the normal procedure. Understood? Now my dear students, this standard is applicable, not from name you will understand amalgamation, but this is also applicable to external reconstruction as well as the absorption of company, though technically you will find the different procedure, rules, regulations for what absorption and external reconstruction, but the accounting procedure for amalgamation, external reconstruction and then absorption is one and the same. Therefore this is included in this standard. Correct. Now what is then amalgamation? Amalgamation means coming together. If 2 and more companies are coming together for doing the business, then in that case you require to prepare consolidated balance sheet, and for preparing that you require to follow AS 14. Correct. Similarly, absorption means what? Taking over of the company. One company is taking another company, and then external reconstruction due to the financial difficulty and then some constraint, we are changing or restructuring that company. And after this in detail we will cover what it means by amalgamation or why we have to do the amalgamation. If you get the note on ES 14, then in that you can write the meaning of amalgamation and then scope also. That means this also included, or this also applicable to absorption and external reconstruction. You can define amalgamation, you can define what external and absorption reconstruction. Correct. After that you can write the purposes behind amalgamation. Why do we do the amalgamation? Why we do the amalgamation? For what? Avoiding competition, for curtailing the cost, for getting the benefit of larger scale of operation, etc. So many other advantages also are there, but for these advantages generally we do the amalgamation. We come together. After coming together, you have to close old companies. In amalgamation 2 are coming together, therefore 2 old companies are closed down. They are closed down their businesses, and then one new company established, therefore that company now does the business, means new business we can say. And then absorption, to understand the very simple example, I already told that in class. What is that example? Now sponge and water limited example. Water is absorbing, sponge is absorbing water limited. Correct. And then water is losing their existence, therefore now only sponge limited in the market you will find. Okay, now have they explained here something related to amalgamation? Now types there in definition, absorption. Okay, you can read this. Absorption, yes, this is given. Difference between these 3 are given. Now existing company takes over the business of 1 or 2 companies. That means they are closing their businesses and you will find only existing. That means no new formation. Existing company is taking, therefore no new formation, but one liquidation you will find. Wrap the benefit of large scale operation you are doing so. And then after that in external reconstruction we are forming a company and taking the business of existing company. That means we are just changing the name. Why? Newly formed takes we are restructuring to recognize the financial structure of the company, just to change the financial structure to get the benefit of change. We are doing so. Example, in amalgamation you will find A, B, old companies. We are closing A and B and forming AB Limited, is new company, or C Limited. We are forming a C Limited to take the business of A and B. Now, what is then here in absorption? We have water W and then sponge. Water is taking, W is taking S. Now, and then S is losing its existing and merging into W. You will now find just W Limited. And what is then external reconstruction? Currently we are having E, and then due to financial constraints, investors are not investing, and then to change the liability as well as asset structure, to write the assets at their book value, we change E to what? Let's say C. We are closing E and then forming a C. You will find C new company, and C, this new company has taken the business of E. This is what? External reconstruction. Okay. Now I have already taught in class. Okay. Now, why we have done this, you know, I have already explained, and the scope also I have explained. That means in this amalgamation, not only amalgamation, blood absorption as well as external reconstruction. After giving idea about this, then next task, types of amalgamation. Now types of amalgamation, but before that, one or two technical terms we will try to understand. In this standard you will find the technical term of purchase consideration. Purchase consideration, what is this purchase? PC, generally we say short form. PC, purchase consideration, means consideration in a form of the shares and other securities paid by, have they given definition here? Purchase consideration, this is the consideration in a form of shares and securities. Yes, purchase consideration, yes. Aggregate of shares and other securities issued and the payment made in a form of cash and other assets. What? Aggregate of shares and other security issued. In this consideration you will find shares and other security and the payment made. This also includes payment made in a form of cash and other assets. By whom? By transferor company to the shareholders of transferor company. That means in a simple word, what we can say as a purchase consideration, यानी purchase consideration यानी जो कंपनी बेचती है बिजनेस को, उसको हमको देना पड़ेगा, यानी नए कंपनी को देना पड़ेगा. क्या क्या देना पड़ेगा? शेयर्स उसके देने पड़ेंगे, या तो अदर सिक्योरिटीज उसका देना पड़ेगा, या तो कैश देना पड़ेगा, या तो उसके कुछ एसेट्स देने पड़ेंगे. ये आप देते हो तो इन सब को मिलाकर वो बोलते हैं consideration. But in a consideration, one or two words are very much important. What are those? Now here check those words, one or two, which words I said. Paid to whom? Paid to the shareholders of the transferor. Now the shareholder word is very much important. If you are giving all of the above to equity or the preference shareholders, then only that forms the part of purchase consideration. If you pay all of the above to debenture holders or to any other liability holder than equity and preference shareholder, then that is not called as purchase consideration. यानी purchase consideration यानी shareholder को दिया हुआ पैसा in form of a share or in a form of other securities or in a cash or in form of some other thing. Understood what is consideration? Consideration कैलकुलेट करने के भी तरीके हैं. इधर उन्होंने स्पेसिफिकली क्या बोला है? कंसिडरेशन टू डिबेंचर होल्डर्स एंड क्रेडिटर्स डज नॉट include in the purchase consideration. This will not form the part of purchase consideration. अंडरस्टूड। ये कैलकुलेट करने के लिए हमारे पास मेथड्स है। तो आपको जब शॉर्ट नोट्स पूछते हैं परचेस कंसिडरेशन के ऊपर, तो उसमें आपको लिखना पड़ेगा ये मेथड्स ऑफ कैलकुलेटिंग परचेस कंसिडरेशन। लास्ट ईयर यू मस्ट हैव स्टडीड। नाउ हियर यू हैव लम सम पेमेंट मेथड। lump sum payment method, the first method. Then after that you will find the next method, net assets method. Then after that you will find net payment method, and then finally you will find here the combination of net assets and net payment method. Methods are very simple. In class we have taken the example of what Tata, he wanted to purchase a company without studying, just by seeing company. It will not happen actually, but just by seeing that company he decided to purchase the company without calculating the current values or agreed values of assets and considering the agreed values of liability. He just say that I will pay you 1 crore lump sum, he said. That is what your lump sum method. In that we do not take into account assets and liabilities. We do not bargain with assets and liabilities. We also not what saying that this is the agreed value, I think this must be the value we think and all. Just at your home you are doing some homework and giving only one offer. That means what, I will purchase company, let's say for 1 crore lump sum payment. Then in a net asset method, yes, on the table you and that company sits together and then you decide the value of each asset. Yes, agreed value. If you say 50 lakhs or 50 lakhs, then you also have to take into account what other company says. If other company says 60 lakh, the selling company says 60 and you say 50, then what to consider? The agreed value. At one point you must be on same page, correct? Let's say you and that company finalize 55 lakhs of the value of land and building. Then in a consideration we consider 55 lakhs. That means we consider not the market price, not the book value, but the agreed value of the assets. But here not just asset written, they have written net asset. Net means something minus something. That means agreed values of all assets minus agreed values of all liabilities. And then by doing this deduction is subtraction, you will get the one value, that is what, the purchase consideration by net asset method. Now after this you will find what, the payment method, net payment method. What is this net payment method? What had happened? Something, some okay, let it be. क्या हो गया कि मैंने ये विंडोज 10 चेंज करके 11 डाला, इसलिए सब प्रॉब्लम हो गए. Okay, what is the net payment method? Net payment method. In net payment method, without considering agreed values of assets and liabilities, we just take into account what transferee company is paying to transferor company. If you are giving them, let's say if you are giving them what, I was explaining about the net payment method. What is this net payment method? Net payment method, instead of considering here individually agreed values of assets and liabilities, we do consider what you are paying. That means you means new company is paying to old company, what transferee company is paying to transferor company. Correct. Suppose if you are paying cash, then cash will form the part of purchase consideration. If you are giving debentures, then debentures will form. If you are giving preference shares, that will form the part of consideration. Equity shares, that will form the part. Total of all will become now purchase consideration, final total. And combination, here we are considering net asset to get the idea about the net assets, and then we give that in a form of shares and debentures through net payment method, and then difference, that could be something we are paying some extra or some less amount in the combination of net assets and net payment method. Suppose if you are giving less than the agreed value, then for you this is what the goodwill, and if you are giving more amount than the net value, then for you that is loss. What I said, if you have given less amount, then that is your profit. If you have given more amount, then that is for goodwill, that is actually loss that we record on the asset side of balance sheet. Correct. After understanding this purchase consideration, then second technical term of the transferee and transferor. What is transferee and transferor? Transferor means the person who transfers the company, that means the seller of the company, and then transferee, the person who gets the company. Understood? Now after understanding this, then the methods of amalgamation. Only two methods, my dear students, we have, or types of amalgamations. First, two types only. Amalgamation in a nature of merger, amalgamation in nature of merger, and then second method, amalgamation in nature of purchase. For merger, we have pooling rate of interest method, pooling rate of interest method, and for purchases we have purchases method. Now when to use merger and when to use purchase? If you satisfy 5 conditions, all of above 5, we can say all 5 conditions, then in that you can use amalgamation in nature of merger. In exam you could be asked the difference between the merger method and then purchase method. If merger method, then in that you will find for accounting pooling rate of interest method. Then when to use merger, for that we will understand if all assets and liabilities of old company or all assets and liabilities of transferor is transferred to transferee company, all assets, then in that you can use merger, and this must be transferred at book value, and more than 90% shareholder must have. Only 5 conditions. First, all assets and liabilities must transfer, then after that at what value? At book value, then more than 90% shareholder must agree, and then after they agree, then you must give them shares, not the cash. Only for a fraction amount you can give share, otherwise they will get your shares instead of their shares. Correct. And then finally your intention must be carried to old business as it is. You cannot close that business, you must carry that business. Okay, this is the, and then after that, as far as accounting is concerned, you will find accounting method. And then in that accounting you will find accounting entries in the books of new companies. Now accounting entries, first purchase consideration payable entry, then assets and liability taken over entry, then PC paid entry, and then finally liquidation expenses entry if paid by new company. Otherwise only 3 entries. Correct. If they ask you about the accounting, then in that accounting you can explain the pooling rate and then purchase, and then after that if you want then you can write the journal entries as well. Understood? Journal entry, very simple, 3 entries: PC payable, then assets and liability taken over, and PC paid. Payable, taken over, and paid. Payable entry, whom you are paying is purchase consideration to what we can say new company account. Now what is that entry actually? New company account debit, sorry, old company, PC payable to old company account debit to purchase consideration. What is that entry? Purchase consideration to shareholders of old company. Have they given here entries? Now the second entry is very simple, and third entry, from that we will form the first entry. Technically that account is I'm little bit confused with the account. Now taken over, assets and assets account debit to liabilities account to what? Here we can write PC, correct? And this is second entry. That means first entry must be PC, purchase consideration account debit to shareholders of transferor company. Yes, transferor company. Then assets account debit to liability account to PC, and then finally shareholders of transferor company to shares, if you are giving shares, equity shares to equity shares, to preference shares, and to debentures to cash. Understood? It's very simple. PC to shareholders of transferor, asset account debit to liability to PC. That means whatever you have debited in first, you must credit that in second, and whatever you have credited in first, you must debit that in third entry. Correct? It's very simple. Understood? Now this is about the entries of PC, purchase consideration. Now after this they have given the problem to us, but from exam point of view, no need to study at all this problem. In regular lectures I have already explained this problem. In this problem the balance sheet is given as well as the new company taken, that means Y taken over. Here in this case Y is what? Y is the transferee and X is the transferor. New company, old company. Debenture holders discharge. Now payment made to debenture holder doesn't form the part of purchase consideration, therefore we will not consider this second part. And then debenture holders got the share at a premium. Now debenture holders, how much they must get? They must get 2,500, that means 25 lakhs. And then they have got what? At 20% premium, 25 lakhs, 2,500 we can say, plus 20%, no, plus 2,500 plus 20%, 250, 10% plus, that means 500. They will get 3,000, that is in 1,000, that means 30 lakhs. And then equity shareholders, what they will get? Share, yes, that we can calculate. And now 20 rupees share for 30 rupees, that means divide by 30 into 20, yes, 2:3, and then you can consider. Now just have a look, or no need to consider this at all, because you would get what could get in exam, short note only. Either, as I said, you will get the short notes on just ES 14, and in that you can write the scope of ES 14 and then just meaning, part of amalgamation, absorption and external reconstruction. Then after that you could be asked the short note on types of amalgamation, if types of amalgamation, 2 types, or you could be asked accounting of pooling rate of interest or purchase method, accounting part of ES 14. If that is asked, you can write that, or you could be asked the purchase consideration, short note on purchase consideration, or the methods used to calculate the purchase consideration. Yes, no, this could be asked in exam. And then disclosure part of this standard. In disclosure, you have to prepare what? Consolidated balance sheet, and then give the heading consolidated balance sheet of A with dash dash dash, and then add assets in assets and liabilities in liabilities, and as per standard just calculate the goodwill or reserve and then write that reserve or goodwill. Correct. This is the accounting standard 14. After 14, my dear students, we have next 16, accounting standard 16. Let me show you that accounting standard 16. Accounting standard 16, corporate account, AS 16. Do we have here class teaching also? We have now accounting standard 16. In accounting standard 16 you will find what? Borrowing cost. Borrowing cost. Then first try to understand what it means by borrowing cost. Borrowing cost means interest and other costs. What is the purpose of this standard? Purpose of this standard is to clarify you whether to write interest in profit and loss or in the balance sheet. That means by studying this standard you can figure out the borrowing cost, and you can figure out whether to write that borrowing cost in a profit and loss statement or in the balance sheet. It's very simple. Sometimes you have to write that in a profit and loss, sometimes you require to capitalize. If you require to capitalize, write that in the balance sheet instead of writing in a profit and loss. Then but before that you must understand, my dear students, what is borrowing cost? Borrowing cost means the interest cost plus other cost in connection with the borrowing of fund. Now interest you will understand, interest on loan, no need to clarify what is interest, but what is other cost, that will understand. Other cost means the related charges, loan related charges. Now stamp duty, etc. and etc. To take the loan you have to pay the commitment fees, commitment charges, then some consultancy charges, related charges we can say. Then amortization of discount on issue of debentures, writing off of discount on issue of debentures. Discount on issue of debentures means loan. On that, if you give discount, then that is your expenses. You must write debit side of profit and loss somewhere. Where? In finance cost. But when to write? We have not taken loan for just 1 year, for more than 1 year. That means we write off every year some part of the loan, so some part of that discount on issue of debenture. And then because this is related to loan, we write that in the finance cost, in the borrowing cost, we consider that. And then financial charges for finance lease. Yes, if you have taken the finance lease, then that finance lease charges will form the part of your borrowing cost. And then other ancillary cost also, miscellaneous cost, and then exchange difference finally you will find in the borrowing cost. Understood? Borrowing cost means major part. Majorly it includes interest plus also other cost, ancillary charges. Yes, here you will find the, as I said, the professional fee. Yes, professional fee paid to the CA for preparing project report and all. Then when to capitalize? Only if you have capital qualifying asset. Then what is qualifying asset? Qualifying assets means the assets which take substantial period to become ready for use or sale or intended to become ready for use. That means if you are taking substantial time. Now in exam short notes will not be asked, therefore I must, but before that you must understand, otherwise you will not understand how much to write in profit and loss. How much to write in profit and loss? For that you must know the definition or meaning of qualifying asset. Yes, you will get the different items. By reading those items, you have to tell yourself or whether that is borrowing cost or not. Identify. If borrowing cost, then next question, whether that is related to qualifying asset or not. If that is related to qualifying asset, then we will think of capitalization. Then we will think of writing that in balance sheet, otherwise in profit and loss account. Then what is qualifying asset? The asset which is taking substantial period to become ready for use. Substantial period means the period of generally 12 months. It could be lesser or more also. Okay. Then if you identify that this is the qualifying asset. After identifying, you have to ask yourself whether that is ACP or not. If that is ACP related to acquisition, construction or the purchase, then only next step, then only capitalization possible. If you have qualifying asset but that is not related to ACP, then capitalization is not possible. Correct. Acquisition, construction or the purchase. If okay, now we have that also. Then when to, how much to capitalize? Yes. What about the amount? When to commence that capitalization? When to write actual amount in on the asset side of balance sheet? When to stop writing that in the balance sheet? That means when to stop capitalization, and when to in between for the temporary purpose period stop the capitalization. Now three things they have given here. Now if they ask the short note on, generally they will not ask, but if asked, then you must write here about something about the commencement, suspension and cessation. Commencement, when you can commence when interest cost is incurred or borrowing cost is incurred, and the first condition must satisfy, then you can check second one, and they are saying the expenses on qualifying asset must incurred. That means you must have incurred some expenses. Just taking decision in the meeting you cannot capitalize. You must spend some amount on what that qualifying asset, plus the activities must be in progress. The asset installation, formation, that activity must be in progress. And then suspension, that means what? In between stoppage of capitalization. Now in that you will find avoidable reason, unavoidable reasons. If avoidable reason is there, then still you cannot capitalize. If avoidable reason, you should stop the capitalization, but you are not stopping. Therefore by force accounting standard 14 is saying you do suspension. म्हणजे that means what? आपको बीच में कैपिटलाइजेशन रुकाना पड़ेगा. अवॉइडेबल रीजन था, फिर भी आप अवॉइड न करके वो एक्टिविटीज इन प्रोग्रेस वो स्टॉपेज कर रहे हो. यू आर नॉट व्हाट installing asset, though avoidable reason is there, you could avoid, but you are not doing so. Therefore law is not allowing you to capitalize interest. In that case compulsorily you have to write your interest in profit and loss. Our unavoidable reason, then in that case law agreed, and then you can write this in balance sheet, you can capitalize, otherwise you cannot. Correct na? In avoidable reason. Then cessation, what is cessation? That means complete stoppage, when you have to stop from transferring it to balance sheet, or when we have to stop for capitalization after completing that installation. That means when asset becomes ready for its intended use, then at that time you can stop the capitalization. After becoming ready for use or ready for sale or ready for intended use, you can stop the capitalization. Understood? Then you will find the types of borrowing cost: general borrowing and then specific borrowing. General, that means specific. General means not for specific asset. Generally we have taken loan and we are using that for any purpose. Let's say we are using that for what we can say, we are using that for current assets, investment in net assets, or we are using for any purpose. And then specific borrowing, specifically if you want to install a machinery, we have taken here loan for only machinery, specifically for machinery. If this is so, then you can consider that as a specific borrowing. Now why I am teaching you is in a faster speed, because बाहर बहुत बारिश होने वाली ऐसा लग रहा है. Yes. Now AS16 here, one example you will find. I will take just one example on AS16. Now AS16, let's check this example. Or it is problems on 16. Now check the screen, my dear students. Now here we have one company. In this company we have taken loan, 70 lakhs rupees loan, and then we use this loan for what? We use this loan for construction. We use for construction of factory site, then purchase of machinery, working capital, and advance for a truck. Now what they are saying, total interest is this much, and then treatment under AS 16, how much to charge to profit and loss and how much to capitalize, they are saying. Okay, now construction of factory side. Now tell me first, this is the borrowing cost. That means in this no need to identify how much is the borrowing cost, no need to calculate borrowing cost also. तो आपको कैलकुलेट नहीं करना पड़ेगा, आपको सिर्फ आइडेंटिफाई करना पड़ेगा जो एसेट दिया है, जिसके ऊपर हमने खर्चा किया है, वो क्वालिफाइंग है या नहीं है. तो क्वालिफाइंग कब होगा? एज आई सेड ACP रहेगा तो क्वालिफाइंग रहेगा. ये पहला वाला चेक करो, एक्विजिशन, कंस्ट्रक्शन और द परचेस. ये पहला वाला कंस्ट्रक्शन के रिलेटेड ये तो ये इसलिए क्वालिफाइंग एसेट है. तो उसके बाद में हम चेक करें, सब्सटेंशियल टाइम लेगा ये कंस्ट्रक्शन ऑफ फैक्ट्री शेड के लिए. तो हमने चालू लोन लिया है और कंस्ट्रक्शन कंप्लीट हुआ है मार्च में, यानी इसने सब्सटेंशियल टाइम लिया है, नियर अराउंड दिस हैज टेकन 12 months. Therefore substantial time taken, therefore we will say this as a substantial or qualifying asset. फिर purchase of machinery, substantial time लेगा purchase करने के लिए, purchase और ट्रक purchase किया तो यूज करने के लिए सब्सटेंशियल टाइम लगेगा नहीं, सिर्फ चाबी घुमाने के बाद वो चालू होगा, यूज करेंगे. दैट मीन्स दिस विल नॉट टेक सब्सटेंशियल टाइम, not a qualifying asset, not a qualifying asset we can write. Then after that working capital, not related to ACP, therefore not qualifying asset we will say. And then advance for a truck, this is not qualifying asset, not advance for a truck. Okay, purchase of machinery, by purchasing machinery, yes, immediately. Installation of machinery, that means assembly of machine, assembling the machinery is different from purchase of machinery, as it is ready machinery you are purchasing and using. And then what they are saying, completed machinery which has ready for intended use was installed, ready for intended use was installed, correct. Install or ready for intended use हुआ है उसका, तो not qualified asset. Only one qualifying asset here we are having. Therefore divide this interest into 4 parts. How? With this ratio 25 is to 20 is to 15 is to 10. Divide your interest is this 9,10,000 in this ratio, and then this part you have to write in balance sheet. And what about this part? You must write this part in profit and loss. If not qualifying asset, cannot capitalize, that means cannot write in balance sheet, you have to write this in profit and loss. Now then how to divide, you know, 9,60,000 divided by 20. Let's say, should I show you calculation? Have they given calculation? If you want calculation, then let's say 9,10,000 into 25 divided by how much? 25 plus 20, 45, 50, 60, 70 divided by 70. You will get what? Amount to be write to balance sheet. And then remaining amount 9,10,000, remaining 9,10,000 into, you can take in total here 25 and then 45 divided by 70 to profit and loss. Amount to be written in profit and loss, that you know 45th part of 70th part, or 25 is to 45, 25% part or 25 units, 25 that part in balance sheet, and 45th part or 45 parts in profit and loss out of 70 parts. Understood? It's very simple. First read the assets, then check for their qualification. If they are qualified, you can capitalize. If not, then compulsorily in profit and loss. Okay, what to write in profit and loss? These three interests you can write in profit and loss. Now what about this problem? Total 30 crore rupees loan we have taken. Now construction, obviously construction still going on during high seas, that means this is qualifying asset. ACP also, and this will take some, the purchase just purchase will not become the qualifying asset, not qualifying asset. Generally will find more non-qualifying assets than the qualifying one. This is also not qualifying asset. Working capital not qualifying asset. Purchase of machinery not qualifying, advance not qualifying, purchase of know-how not qualifying, and then you will get the interest. Just divide this interest in this ratio. Yes, in this ratio. Yes, interest related to 25 crores will be written in balance sheet, and then all of these interest related to all of these will be written in profit and loss. Understood? 16. Very simple. Then after this, my dear students, we have next accounting standard. Accounting standard 20. Accounting standard 20 is for earning per share. Should I stop? Okay, in next few minutes I will explain. Accounting standard 20, let's say AS 20. Still I am sitting in the college. Okay, just check. Accounting standard 20 for earning per share. Earning per share we can say that means earning for one share. Earning for whom? Equity share. एका इक्विटी शेअरची व्हॅल्यू किंवा अर्निंग तुम्हाला कॅल्क्युलेट करायची. In that you will find basic as well as diluted. In exam you will not get diluted, you will get only basic. Now earning per share, that means total earning divided by number of shares. Total earning means what? The earning before tax, earning available to equity shareholder, earning available to equity share, total earning available to equity shareholder. That means profit before tax minus preference dividend. Correct? After everything, whatever is remaining to equity shareholder, that you consider as a numerator, and then denominator outstanding equivalent shares, number of equity shares, outstanding equivalent number of shares. How to calculate that we'll see. Now then yes, weighted and all. Straight away we'll solve one problem to understand. You will understand everything instead of explaining. Just check the problem. In classroom we have solved so many problems. Now let's say here, let's say in this problem, what they are saying, following is information, calculate earning, conversion and all. First, what, how many shares do we have here at the beginning? Now EPS, they said us to calculate earning per share, EPS. Okay, how do we calculate earning per share? Earning available to equity shareholders divided by outstanding equivalent shares. Outstanding equivalent shares. Now earning available to equity shareholders, numerator. Let's say numerator means what? Profit before tax. Sometimes they give before interest also, profit before tax and let's say interest. Profit before tax and interest minus, sometimes you will get before depreciation also, minus let's say then depreciation. Profit before tax interest and depreciation. Okay, now what to do with that? Profit before tax, interest and depreciation minus depreciation minus, let's say, interest, and minus interest, depreciation. Okay, after deducting this you will get profit before tax, and then you can deduct the tax on what? Profit before tax. And then after that you will get profit after tax, and then from that you have to deduct preference dividend, and then after deducting you will get earning available to whom? To equity shareholders. Understood? Profit before tax, interest and depreciation. From that deduct depreciation if given, then depreciation, interest, and then you will get profit before tax. From that deduct tax, you will get profit after tax. From that deduct preference dividend, then finally you will get earning available to equity shareholders. Correct here. Now let's take the example what they are saying: profit after depreciation. Therefore no need to deduct depreciation in this example. Profit after depreciation is given, but before VRS payment, what they are saying: 75,000,000, 75 lakhs. After depreciation, therefore don't deduct depreciation 0, because we have already considered. But before VRS payment, therefore let's say VRS payment. Now VRS as such you will not find now. Interest, for VRS we can say interest, minus 32 lakhs 10,000 rupees. Yes, and then interest. Now हे खूपच जुना प्रॉब्लेम. फ्रेंच बेनिफिट also does not exist. एफबीटी तो पण गेलाय, त्यालाही काढून टाकूया आपण. खूप जुना प्रॉब्लेम आहे ऍक्च्युली. जिसका एफबीटी दिलाच नाही असं कन्सिडर करा. इथे इरेज करून टाकू का मी पण. Depreciation, after depreciation is written, therefore don't consider again depreciation, because 75 lakhs we have already deducted. After considering that depreciation we have calculated 75 lakhs. Don't again consider it, otherwise that will become twice deduction. 0. And then VRS payment, let's say other expense, other payment, interest payment. Now deduct interest, you will get one figure. Let's say you have got here now do the calculation instead of checking there. Okay, now this is what? Profit before tax. And then what they are saying about the tax? Provision for tax 10 lakhs rupees. Let's say tax 10 lakhs. Finally you will get what? 3290. And then have they given any preference dividend? No. Therefore don't consider. This will be your final, and then divided by shares, number of shares. Yes, you can divide it by number of shares. I should record lecture at home. then outstanding. Now you can calculate, or should I show finally within 2 minutes how to calculate outstanding shares? Outstanding equivalent shares. Suppose on 1/4 we are having 10,000 shares, on 1/12 we issued next 2,000 shares, and then again on 1/3 if buyback issue, and let's say opening buyback of 1,000 shares. Now how do we calculate outstanding equivalent shares? Now from this date, our target is to calculate value on 31st March. Yes, therefore now draw the table as I said, date, then number of shares, then weight or period we can say, and then finally numbers into weight. I don't have that much time, therefore 1/4, 1/12 and 1/3 with 10,000 shares, 2,000 shares and then 1,000 shares. Buyback therefore in bracket, very important. If you buy back the shares, then that you must write in bracket. Now weight from 1/4 to 31st March. Here 30 up to 31st March you can write 1/4 to 31st, 12 months. 1/12 to 31st March, that means 4 months. 1/3, that means 1 month. Now then after that here you will get 1 2 3 4 1,20,000. Then 4 is 8 to the 8 and then 1,000, and then you will get the equivalent, yes, total. And then finally outstanding equivalent average, that means finally you must divide it by total weight. That means 1/4 to 31st March weight, 31st 3 weight. 1/4 to 31st March, that means total weight 12, and then this 128, 127, 1,27,000 divided by 12, you will get outstanding equivalent shares, that means denominator. Numerator, just remember this, numerator and denominator. Now the small table, this total divided by 12, you will get the denominator. Just numerator divided by denominator, you will get earning per share. Now so many other cases are also involved here, diluted earning. Then after that, if bonus issue is there, then at that time we do not consider a date, but we consider the 12 months weight. I have already explained in regular classes. My dear students, here we are closing the session. What about the 22? Now you will get note on 22. I have already explained that to you in regular classes. Thank you. Correct. If you want something about 22, should I? ES 22 सिर्फ आपको थोड़ा सा आइडिया देता हूँ. ES 22 ES 22 is talking about the taxes on income. Taxes on income generally you will find in the profit and loss account, profit after tax, correct na? You will in the accounting you will get the profit, that means you will get accounting profit, but on the accounting profit we do not pay tax, we just do the provision for tax. On what basis we pay then tax? On the basis of income as per what? Business and profession. That means the rule of income tax are different from rules of your calculating profit in profit and loss statement. You will get their different profit than your profit and loss accounts profit. Now then what is that difference? Sometimes the difference is because of permanent items, or sometimes difference is because of temporary items. Here we will find some difference ना, difference है तो difference किस लिए आ रहा है वो आपको चेक करना पड़ेगा. टेम्पररी टाइमिंग डिफरेंस है तो आगे पीछे किधर तो रिवर्स हो जाएगा, मगर परमानेंट डिफरेंस है तो रिवर्स नहीं होगा. तो रिवर्स होता है तो ही आप डिफर्ड टैक्स एसेट्स या तो डिफर्ड टैक्स लायबिलिटीज बुक कर सकते हो बुक में, यानी डिफरेंस आपको मिलता है तो आपको पूछना पड़ेगा ये टेम्पररी डिफरेंस है क्या, तो टेम्पररी डिफरेंस है और subsequently you can reverse it in a future, then at that time we will make a provision for deferred tax liability or deferred tax assets. On this standard, if they ask you note on ES 22, then you can write scope of ES 22, then you can explain income as per business and profession, profit as per profit and loss, then you can explain the timing difference. In that you can difference temporary as well as permanent difference. Temporary difference means the difference which can be reversed in the subsequent period, and permanent which cannot be reversed in the subsequent period. Examples: temporary difference, depreciation difference, then some cash expenses, and the depreciation is very good example of a temporary difference. And then a permanent difference, you will find the penalty. Penalty, you can write penalty in the profit and loss debit, and then you deduct that from gross profit to get the net profit, correct? But Income Tax Act doesn't allow you to deduct the penalty, correct? You will not get the benefit. And then section 43B, some cash expenses, income tax department disallows, but in accounting we write that on the debit side. Therefore what, we'll find that difference, and that cannot be reversed in the subsequent period. And then some items like RDD, that is not allowed in income tax, but that is allowed in accounting, correct? And then after that, let's say you will get the benefit on the actual payment, not on just making the provision, correct? Employee payment, if we pay, then we get the benefit in income tax. If we do not, you will not get the benefit. That means what? This is the timing difference. Explain, give the examples and explain. You will get the marks of ES 22. Plain note on ES 22 or the timing difference note on that. What is that timing difference? And then types of timing differences, and then examples on the timing differences. Some temporary examples, temporary difference example, and some examples on the permanent differences you can give in exam. Thank you my dear students for cooperating. Both बारिश हो जाएगी, होने वाली है ऐसा लग रहा है, और कॉलेज भी अभी क्लोज करने के मूड में है, तो इसीलिए हम इधर ही रुकते हैं. रेगुलर क्लासेस में हमने ये सब डिटेल में स्लो लिया हुआ है. आपको मैंने टेलीग्राम पे सब कुछ दिया हुआ है, आप वो चेक करो और एग्ज़ाम में अच्छा परफॉर्म करो. थैंक यू सो मच.